Sapan Ghai, Chief Commercial Officer of Sovereign Metals. Sovereign Metals is developing the Kasiya project in Malawi. Kasiya is looking at producing two of the critical raw minerals for society and for a greener future. One being natural rutile, which is the purest form of titanium, and the other being natural graphite, which feeds into lithium-ion batteries for electric vehicles.
Sapan, good to see you. We're going to try and do something a little bit different today, if you don't mind, which is take advantage of the fact that you've just been to a conference. And I think most investors, when they hear companies have been to conferences, they have a view that it's just a jolly or, not much happens at them. So I'm going to ask, if you don't mind, to tell us a little bit about what went on recently with the Titanium Summit, which you've just attended. What did you go there to try and get out of it, and what actually happened?
Sure. A couple of good questions there. So we attended in fact, we were one of the key sponsors for the TiO2 World Summit, which took place last week. All sounds very fancy, but essentially it's all corporates who have any kind of dealings within the titanium dioxide space. So we went along as obviously having the largest rutile deposit in the world, and therefore potentially one of the largest future suppliers of titanium dioxide into the space. Just as a reminder, rutile feeds into three main industries: TiO2 pigments, which is about 60% of the industry. That's a $15 billion per annum space. You have your welding, which premium rutile feeds into, which is around 30% of rutile use, and about 10% goes into titanium metal, which is, we're all more au fait with the actual metal titanium. So this conference was really focused on that 60%, that TiO2. So you had your pigment producers around the globe who were there, the guys who take our material, who would be essentially our future customers, taking our rutile and producing a pigment, a white pigment, TiO2, which is then used by their customers. And really, we wanted to figure out where we stack up and what that entire supply chain looks like. Ultimately, where the guys digging this stuff out of the ground, and we wanted to understand, where does it all end up? And it was interesting because our future customers were the likes of Apple, IKEA, Jaguar Land Rover, Renault, big names who were all in attendance at this summit, because essentially they all use and need this product. They all produce goods that need some kind of high quality, longevity type of paint or pigment, whether that be paints, plastics, coatings, whatever. And it was interesting to kind of figure out where we would stack up within that ecosystem.
Yeah, it's interesting actually. The bit I want to kind of get out of today, and I imagine lots of investors want to try and understand, is clearly you're way upstream. You're the guy digging the stuff out of the ground, right? Everyone further downstream from you has their own sets of concerns too, which is, is there enough of this stuff, or do I need to do what some of the battery metals guys are doing, which is battery manufacturers and OEMs moving further upstream and trying to take a position in companies to kind of secure that. So what did you get to, what did you understand in terms of the supply? Because you're saying, okay, we're potentially one of the world's biggest rutile producers. What does that do to the market dynamics? Does it suppress price growth, or is demand outstrip supply still?
Look, so in order to manufacture pigment, TiO2, you need the raw materials, which are either rutile or ilmenite, and rutile is about 500,000 tons per annum volume, compared to about 7.5 million tons of ilmenite and other lower grade types of import raw materials. The difference being that rutile is 95-96% TiO2 already, so it's it's more ready to be turned into a final product, whereas ilmenite is 40 to 60%, And it obviously undergoes a kind of quite an energy intensive, carbon intensive process to turn into one of the alternatives to natural rutile, whether that be a synthetic alternative or a titanium slag. In both those cases, it still doesn't get up to the 90s type of quality that our product naturally has. What was interesting was that there was, I think, up the chain towards the miners, there wasn't much there wasn't really that knowledge that actually it takes a long time for these mines to come online, and there's not much of this, whether it's rutile or ilmenite around in the world, and there's only a handful of suppliers out there that are producing this stuff and can produce into the future. And in fact, one of the key messages that I think we got across to some of the players was just the huge supply deficit that rutile itself is facing, right? Natural rutile, 500,000 tons. It was 700,000 tons back in 2017. In another 36 months, it's meant to be below 300,000 tons. And that's just because those rutile mines that were around are slowly depleting or getting harder to mine, the grades becoming lower. The fact that we found the largest rutile deposit in the world and the first real big rutile deposit for the last half a century kind of, knocks that whole supply system around a bit. But even at the levels that we're looking at, potentially producing at 250,000 tons, we're nowhere near even 2017 levels of rutile feeding into the market. So it's not like we'd be glutting the market with any extra supply. So I don't see us as having any major impact on those future assumptions around rutile prices.
Okay, well, that's important. That's important in terms of your economics, and it's important in terms of. Well, I guess do other companies try and get in on the act, in terms of competition, and managing or trying to take advantage of that kind of supply demand gap, as it were. I mean, were there other companies there, talking about being able to get in production, whether it be early stage or not? I mean, how do you sort of see the landscape going forward?
Oh, look, I think the reality is with this new wave of uses for TiO2 upstream, into clean tech and various other uses. Okay, I think everyone is feeling the pinch with current energy prices, etc. But if we're looking ahead 4 or 5 years from now, I think the view is that there's more than enough room for all these players to come online. Obviously, when it comes to rutile, the big USP almost that we have over alternatives is just our ESG credentials and the lower carbon footprint that rutile has over ilmenite derived alternatives.
But two questions. One, if I look back to the sort of lithium space in 2017 or so, before the kind of battery mania took over, it always felt like the big lithium producers could turn the tap back on, and so therefore, what's the point even trying to compete? You're saying here, and obviously that dynamic has changed in the sense that the lithium demand is significantly higher now, so that problem goes away. But there's not that problem. You're saying there's not that problem here with rutile. The demand is significant, and therefore your business is safe.
Oh, absolutely. Look, the demand equation, I talked about the supply side equation being, kind of 700,000 tons at its peak when the demand was still around 2 million tons. So we're really not even capturing most of the demand side of the equation.
Okay, then I want to go on to something you just said. You started talking about ESG. It felt like there's an ESG phenomenon at the end of 2020, all through 2021, even the beginning of this year, and then people just got super bored of it. It's like, stop talking about ESG. It feels like a gimmick, right? Yeah. Was it a big topic of conversation at the conference?
It was about 25% of the conference was ESG centric, and I think it's still very much Even if your lay investor is not thinking about it at the C-suite level, I think everyone is still thinking about it. We just recently heard about Rio Tinto and their decarbonization program in Canada, where they're looking at new technology to help smelt their ilmenite in Canada and lower their carbon footprint by something like 95% or so. They're also looking to get into the titanium metal space as well. And they're getting backing from the government of Canada, something to the tune of over half a billion dollars over the next 8 years in order to get there. So it's really still very much a key focus. Look, and I think everyone was talking about essentially the uses of TiO2, how they're changing, how they're becoming something more attuned to sustainability and environment. And yes, you're right. We were all banging the ESG drum in one form or another. 24 months ago. I think what's going to happen is you're going to slowly find the companies that have empirical data behind their ESG strategy almost bifurcate from the rest of the market, which is still trying to get there. There were plenty of anecdotes about, there was a study in India, for example, where they painted the roofs in a town white using obviously TiO2 pigment paint. And that lowered the temperature in those buildings by 10 degrees. It was quite interesting. So those anecdotal things are still going on. Obviously, the first thing we did with our Rutile was to just get an independent consultancy here in the UK to look at our life cycle and assess the carbon footprint of our products, which I've talked about in the past, but we're looking at almost 95% lower carbon footprint than the alternatives in terms of our titanium feedstock production.
Right, and that doesn't matter. I had an issue with funds rebadging themselves as ESG funds. I mean, I think the criteria was always there in one shape or another. But the companies have a responsibility to, I guess. I'm not sure if you want to go here, but I think it's kind of important. Off the back of, I think today we saw some Extinction Rebellion individual glue themselves to a piece of artwork somewhere in the world to protest against, all things fossil fuel, and I think mining comes under that banner as well broadly. So, I mean, are people right to be concerned about the way that mining companies actually behave and how they go about doing their business to extract these metals and minerals from the ground?
Look, I think maybe 10 years ago, there was a view that, if, for example, when we were in a super cycle, everyone wanted to just get the commodities out, get them sold, maximize shareholder value, et cetera, et cetera. So it was par for the course to have, diesel generated power plants on site. It wasn't the norm to look at hydro or solar. In fact, those things hadn't even been thought about or built around mining. I think that's all changed. In our scoping study, for example, that came out earlier this year. We've thought about everything from that power situation, and most of our power will be coming from a solar power plant that we've engaged a Canadian company which has built umpteen of these solar plants around Africa, and a couple of them actually in Malawi as well. We've been talking to them about how we plug into a solar array there. Thankfully, we're in a part of the world where even the grid is run off hydropower, so that helps us with the renewable side of stuff. And I guess the other thing that a lot of people talk about the E within ESG, because it's very easy to link your product to something that could help the environment. But I think a lot of mining companies, and we especially have done this in our scoping study, has been to go back to, how can you sustainably mine this stuff in the first place? How can you make sure that your carbon footprint is as low as possible when you're getting this stuff out the ground, because the reality is we need that stuff. Whether it's future urbanization, whether it's the clean tech. I read the other day that in order to meet the demand for electric vehicles by 2040, we need something like 96 new graphite mines coming online, which of course, I don't know if there are 96 average graphite projects out there. We're obviously blessed with one of the largest flake graphite deposits within our Rutile project itself, which is a huge plus for us. But yeah, I think, look, even if I go forwards into thinking about how we mine the project, how we rehabilitate that project, we've made sure that we've modeled an approach that is sustainable. So, for example, at Kasiya, we're looking at progressive rehabilitation, which means rather than using up land for decades, we're looking at progressively rehabilitating that land. So we take the stuff out, we take the material out, we take the goods that we want, the rutile, the graphite, the rest of the material goes back where it was before. We basically bring that back to scrubland or farmland or whatever it was previously, and that's like a 3 to 4 year process. And it's been done. It just hasn't been done all the time, everywhere, as much as possible. So with the size of a project like Kasiya, it just makes sense for us to progressively rehabilitate rather than go back in 50, 60, 70 years' time and try and refill all those holes we dug up.
Yeah, that's really interesting. I mean, people kind of forget about the rehabilitation and the need for companies to get rehabilitation bonds in place or remediation bonds in place, before the project starts. I think for me, these kind of, whether it be Extinction Rebellion or NGOs or whoever who are railing against mining, I would like to think in most instances it's about making sure the mining community, natural resource community more broadly, are held accountable, right? Or stop and change and think about the way that they do things. And you guys obviously have done that in spades. Pardon the pun, where the putting the land back to what it was before is good, because the truth of the matter is we need these metals and minerals out of the grounds to be able to make the phones, the computers, the laptops, the cars, the trains, the buses, whatever it is, the clothes, quite frankly, that we wear. And I hope people understand. Hope some of these people understand that, but I think they're absolutely right to make sure natural resource companies do their job and do it in the best possible way. Sort of, I don't know if we want to class it as necessary evil, but certainly something that's very necessary for everyday life.
Yeah, look, I think one of the key things that you said there was about reporting your ESG credentials almost, and we've done it in whatever sense you'd expect a mining company at our stage of its life to do through a life cycle assessment. But yeah, I can see as we progress, I can see the sector really getting a standardized approach to its ESG reporting and really focusing on all those three, as I said, the environment, the social, and the governance side of stuff. Because it's very easy to do the environmental in a world where everything is focused on decarbonization. It's a little harder to make sure you're ticking all the boxes across the board.
Okay, one last question, which is, we know you went in there to try and find out how do you value, or how do you say, do you know what, that was a good use of money, it was a good use of time, our shareholders' money, I may add, to go to a conference like this. Did you get what you wanted out of it?
Yeah, I think what was interesting was one of the speakers talked about the upstream supply chain, where the ultimate raw material comes from, and I think it was news to a lot of the downstream players that actually, mines, titanium dioxide or rutile or ilmenite mines take something like on average 15 years from exploration into production. They almost thought like you could turn the tap on and this stuff will flow and it will always be available. And it was useful for us to actually let people know, A, there hasn't been a rutile discovery for the last as big as ours for the last 50 years, and B, actually, even though it takes 15 years for an average company, we really only started to discover what we had towards the beginning of 2019. We're now towards the end of 2022, and we've already got a scoping study done. We're figuring out how big this thing could be, but even on the basis of the scoping study, we know that there is potential for economic development of this mine. And hopefully by mid-year next year, we'll have a PFS out, and that will obviously flow into a bankable feasibility study. But we're looking at, and if we're looking at our timeline and thinking production in 2026, that's 7-8 years versus an average of 15. So I think we've done pretty well.